Money, I just can't get enough.
Across Australia, this is Money News with Brooke Corty.
Money.
Happy Monday. Welcome to the show. Blockbuster, Scorcher, Mammoth, and here's one from me, historic. Superlatives are flowing freely today following the news that Buy Now Pay Later, darling, Afterpay will be taken over by the US payments giant Square for a whopping $39 billion. This is the biggest takeover deal in Australian history. The wider benefits from deals like this cannot be overstated. It's a huge story. We'll look at it from all angles tonight. A couple of great guests coming up for you this evening on Money News. It's certainly lit a fire under the ASX. Surged 98 points today, closed at a new record high of 7,491 points, having blasted through 7,500 points earlier in the day for the first time. We've got one Aussie dollar buying 73.56 US cents. Naturally on the market, tech stocks were the standouts, but also, of course, it's earnings season kicking off this week. We've got a third of the country stuck inside their homes. So I wonder how far through the lockdowns markets are willing to gaze. I'll chat with Chris Stott from 1851 Capital in a little bit. And another week and another report showing house prices just keep on booming. I'm going to walk you through the CoreLogic figures that came out on property prices today. But also tonight, if you're buying or selling a home at the moment, have you been mucked around by lockdowns? Give me a call, 131 873. It's a difficult task already. How much harder has it made it? Anything quirky going on that you're finding? Email, send those via the website. If you'd like to text me, you can do that on 0460 873 873. Great to be back on the air for a new week of Money News. All of that and plenty more ahead. Seven years ago, Nick and Anthony were neighbours in Sydney and began chatting over the back fence. And they came up with an idea, one that would reinvent the way we pay for things while challenging the dominance of major banks and the influence of global credit card companies. Afterpay. In just 6 years, Anthony Eisen and Nick Molnar have turned the Buy Now Pay Later group from nothing to a company now worth $39 billion. Today was the news that Afterpay is going to be acquired by Square. Now, Square is the US payments giant that is led by the bloke that also founded Twitter, Jack Dorsey. It is the largest takeover deal in Australian history, and in the years to come will stand as a defining moment for Australian entrepreneurialism. We're going to look at that aspect a little bit later in the show. James Ayres writes about banking and fintech for the Australian Financial Review. He's been writing about Afterpay since its inception, and I wanted to get him on tonight because he's also co-authored a book with his AFR colleague, Jonathan Shapiro, titled Buy Now, Pay Later, The Extraordinary Story of Afterpay. And it hits the shelves tomorrow. James Ayres, welcome to Money News.
Hi, Brooke. Thank you for having me on the program.
Well, of course, we had to have you on the program. You followed Afterpay closer than most over many years. Did today's deal take even you by surprise?
It did come as a surprise. We got a little bit of a hint back in April that Afterpay was looking to list its equities in the US, which we thought, considered, was considering some kind of exit option or most of its business is over in the US. The majority of its sales is over there now. The majority of its customers are over there now. So we got this sort of announcement in April, just as we were finishing off writing the book. There's a long turnaround time for these things, and we sort of thought perhaps they're thinking about something over there, but we really didn't expect that it would be, a $39 billion acquisition from one of the largest fintech companies in the US, Square. There's a little bit of chatter over the years that maybe a PayPal or even a bank would buy Afterpay, but I think it's sort of taken the market by surprise today.
And you've just been captivated by the story since you first heard of it all those years ago. If you can, what is the brief rundown of what $0 to $39 billion has looked like in 6 years?
Look, it's probably definitely the fastest amount of value created, by an ASX-listed company in the shortest amount of time. I mean, as you say, sort of $39 billion deal, and the company was created in 2014. Sort of came about when a couple of neighbours, Nick Molnar and Anthony Eisen, sort of met over the back fence in the eastern suburbs of Sydney. They sort of talked about digitising lay-by, which obviously a lot of your listeners will recall, and it's been around sort of for a long time in Australia. But it came along at the right time with smartphones having arrived, and young people, young millennial people, sort of turning away from credit cards, and sort of the banks having a bit of an odour with respect to the way in which they charge for products. So Anthony and Nick sort of talked about this idea for a few years, and the company sort of was created in 2014. Raised a bit of private funding in 2015, but then it started to grow pretty quickly, and these guys realised they needed a lot more capital. They weren't able to sort of find that from the banking sector or the venture capital scene, so they went to the ASX pretty early, listed for $1 a share in May 2016, and it's been a pretty amazing ride for shareholders ever since. There was a lot of growth in 2017 and then 2018, and this is one of the reasons John and I became quite captivated with the company. There was a lot of questions raised in 2018 from consumer groups and ASIC, the corporate regulator, and then later the Reserve Bank about where Afterpay fits into the scheme. There were fits into the Australian legal system. There were plenty of questions raised about that, and there were a lot of polarising opinions on the stock market as to whether or not it was a real company or not, and they got through that, and culminating, I suppose, in COVID last year, which really turbocharged e-commerce growth, and after the stock fell off a cliff, as many of your listeners will recall, in March last year, it just came roaring back along with fintech more broadly, and culminating in today's incredible deal.
Yeah, and I like the way you say that we've debated the value of Afterpay. I mean, it's almost become a sport amongst traders and investors. What is Afterpay worth? Is it worth anything at all? I mean, it's just been ongoing, hasn't it? And today we find out $39 billion is what it's worth. I mean, as you describe, it was just perfect timing for what was going on, perfectly placed in the payment space. As you said, some people have described it as falling between the cracks, but timing has been everything for them, which made me think, we were only chatting 2 weeks ago or so on this program about the competition coming into buy now, pay later from major deep-pocketed companies like PayPal, even Apple here in Australia, CommBank. Do you think that this has something to do with the timing of this deal today, the takeover from Square? Yeah,
I think it does. As you said, the competition's just been intense. We've seen, when Afterpay was conceived, it was looking at companies like PayPal and Affirm and Klarna, which we sort of detail in the book, and basing, itself off these companies that were created before it. But a lot of those companies charge traditional credit type of products with interest rates and the like. So the real innovation of Afterpay was to have the merchants fund the cost of the short-term credit contract and not have any interest charged, and customers only charged if they pay late. And that was, an innovation. Sort of sounds like such a simple idea. That was sort of the beauty of it. And then you had those companies sort of copy Afterpay. So Klarna, in the United States, part owned by the Commonwealth Bank, PayPal have adopted this sort of pay in full without interest model. And as you said, the major banks have had to respond. So they're sort of, copying the model as well. And Apple, reportedly teaming up with Goldman Sachs to sort of create a similar kind of thing as it sort of looks to enter credit. So I think you wrap all of that together, and Afterpay was facing a lot of intense competition in the United States, like a land grab. To get retailers to sort of understand the product and sign on to it. So, these are deep-pocketed players, PayPal, these are huge companies. And, yes, I think it realised that it needed, even though it had done very well in Australia and it was growing, and is growing very quickly, it needed more scale, it needed more reach. And Square's a $120 billion US, New York Stock Exchange listed company that has far more users and merchants than Afterpay does in the US, like 70 million users of its apps, compared to Afterpay's 10 million and maybe 1 million plus merchants using Square's payment software in the US compared to something like sort of 30,000 US merchants for Afterpay. So Square is so much bigger. And yes, I think, a strategic, motivation of the deal today was to get Afterpay together with Square so they can really take on the real big guys like PayPal's and Apple's and the like.
Now, this book about Afterpay that you've written with Jonathan Shapiro, incredibly, comes out tomorrow. So this is a massive plot twist for you. But I understand that Nick Molnar and Anthony Eisen were very unenthusiastic about your book when you first rang them to tell them that you were writing it.
They thought it was too early to put the Afterpay story together. And, once we've seen what we've seen today, maybe this was something that was on their mind when we reached out to them in the middle of January this year to tell them we were doing the project. Look, they've helped us as best they can and answered our questions and been pretty good sports about us writing it. But we've done the book independently. It really has been an interesting story to tell.
That's an understatement. It's a perfect week. In terms of perfect timing, you guys nailed it. Everyone wants to hear all about Afterpay today. Thank you so much, James Ayres, AFR banking fintech writer. He's the author of Buy Now, Pay Later, The Extraordinary Story of Afterpay. It is out tomorrow. James, thanks for your time.
Thank you, Brooke.
131873. If you've got Afterpay shares, go ahead, brag. Did you like that news today? Are you happy with the deal? Because you'll get shares in a major global payments player. Are you happy with that? Or maybe you've cut up the credit cards and you use Afterpay these days. And you've been part of this revolution that we've seen and that Nick Molnar and Anthony Eisen have so benefited from in the last 6 years. Someone on the text line's got a question. I might address that coming up after the break. We'll also check the markets because it wasn't the only big deal that was announced in terms of corporate merger and acquisition activity. Another massive one to mention. I'll do that after the break. Welcome back. 131873 is the open line number. Welcome any of your calls on Money News and particularly what we chat about on this show. Jack has given us a call from Melbourne. Jack, thanks for your call. Welcome into the show.
Yeah, thanks, Brooke. Just wondering what the ramifications would be for other buy now, pay later companies like Zip, for example, which is kind of second ranked in Australia, and Sezzle perhaps. What would be in the pipeline for those companies, share price wise?
Fabulous question. Just in the terms of the share price reaction today, I'll go through the rest of the market in a second, but Zip shares were up 9% to $7.24. So there's a lot of chat this morning based on the valuation, this afternoon, based on the valuation we got there from Afterpay at $39 billion today. It makes Zip look very undervalued, which is what they've argued at Zip for some time. But if it was bought out at the same metric, if Zip was bought out at the same metric, it'd be worth $9 billion. And it's kind of trading at roughly half that at the moment. So there's a lot of excitement about what the valuation means for some of these other stocks, but also more broadly what it means for the tech space. And that's what we'll be chatting about in about kind of 15 minutes or so now, that the knock-on effects for the tech sector more broadly in Australia. As I said, so we'll put that question coming up. So thanks for your call, Jack. And I can see on the text line here, actually I'm going to save that one. That one's from Joey. Joey, I'm saving yours. I want to mention quickly Oil Search, because this was the other massive deal today. On any other day, this would have been the story. A $21 billion merger deal between Oil Search and Santos, agreed in principle. And the goal of the merger, they're saying, is to create an oil and gas regional champion. And it's going to see the group overtake Woodside Petroleum in terms of size and production. And if you're an Oil Search shareholder, the proposed offer sees you get 0.6275 new Santos shares. So that's the equivalent of about $4.52 per Oil Search share, and that's based on the price of kind of late June 24. It's a premium of almost 20% on Friday's close.
And now on Money News, the market wrap.
Yeah, new week, new month. There was risk on and underpinned really by the $60 billion of corporate deals announced today between Oil Search and Afterpay. There's a lot going on. Market went through 7,500 points for the first time, lost a bit of steam towards the close, but still managed a record close, 7,491.4. It was up 1.3%. Miners struggled. And again, on any other day, I think we might have spent a bit more time looking at these miners, with the iron ore glutton China saying a few days ago it was cutting back on demand of the essential steelmaking ingredient, and the news sent the iron ore price below $200 a tonne for the first time since May. So miners did struggle today. Chris Stott is the co-founder and CIO of 1851 Capital. Chris Stott, welcome into the show.
Hi, Brooke. Thanks for having me on.
A lot of deals. It's certainly a feel-good factor, isn't it?
It's been an extraordinary year, hasn't it, in M&A? I mean, we saw that today with the two deals with Afterpay and then All Search and Santos. We don't remember a period in time where we've had so many takeover offers right across the Australian market in such a short period of time. And it makes sense with low interest rates, cheap debt and company balance sheets in some of the best shape they've ever been. So it all bodes well for the future.
Yeah, and just as a kind of a backdrop to the corporate earnings season, which really kicks off this week, there's deals, there's big dividends expected. It's all looking really good at the moment.
It really is, and we think that this upcoming reporting season could continue the momentum we saw from the last one, which was probably the best reporting season that we've seen in over a decade. We'd expect this one to be just as strong, if not better. As you say, capital management will be a strong feature. I think elevated levels of dividends will be a strong feature going forward. Outlook statements will be interesting. Companies might be a bit more guarded than usual given the various lockdowns that are underway right around the country. But as we've seen in recent weeks, the market continues to look through those lockdowns as we know the path out of this. We've got successful vaccines that are being rolled out around the world, and we can kind of look to the UK and the US and see what life will be like here in 6 months' time, hopefully. So equity market investors continue to look through these recent lockdowns in terms of the impact they will have on company earnings.
Yeah, isn't that interesting? And we kind of don't have that awful gut feeling that we had last year because we didn't know what the other side looked like. Whereas now, as you say, we can see, Britain getting back to normal, and we can see people in the United States, we've got that light at the end of the tunnel. And ironically, it seems to me that the lockdowns we're now having in our very big cities, in our biggest cities here in Australia, in a sense, they only push out the chance of a rate rise. We were kind of bringing in that idea that, okay, I think rates are going to rise sooner than expected. And now with lockdowns, that gets pushed out. And that really only underpins further gains for the market.
Well, we think so. And that was all the chat about 6 weeks ago, was the fears around inflation and wages growth returning a lot earlier than people had expected, and the rates going up, in September next year, which was a lot earlier than what the RBA is saying in terms of rates not going up until the year 2024. So this certainly pushes out the recovery, these recent lockdowns, by perhaps another 6 or 9 months. Our expectation is we'll see the first rate rise here in Australia in 2023, and that's normally what puts the handbrake on equity market returns. So until then, we think we've got a really strong period ahead, in terms of what the Australian market could deliver over the next 12 or 18 months.
No handbrake until 2023 in sight. How fascinating. On 131873, Jenny's on the line from Victoria. Jenny, you actually bought Afterpay shares a while ago, did you?
Yes, I did, at great risk. Well, after the pandemic first started, I sold a lot of shares just to have some a bit of a nest egg of cash put aside, and then I thought I'll take a risk and buy into Afterpay, and I kept buying them, and it's been a roller coaster. There's been quite a few times when I thought I should pull a pin, but I'm thrilled for the boys. I think it's the most amazing story.
And you've done well out of those shares. Do you remember what you bought them at, the lowest price?
Very well. At around 40, and then the highest was about 85.
Nice.
Yeah,
fabulous.
So I'm happy.
That's great. Yeah, you should be. Hey, Jenny, thank you. As you said, highs and lows, that's for sure. So, great of you to call us on 131873. Chris Stott, you were actually, when you were the Chief Investment Officer and Portfolio Manager at Wilson Asset Management, before you started your own outfit, you got Wilson Asset Management in at the IPO level. So you were one of the first true believers.
Well, we were, and it was a fascinating meeting that we had with Anthony and Nick at the time. Nick was 27 years old at the time from memory, and he's probably the smartest guy I've met under the age of 30. Very entrepreneurial, and to have the steady hands of Anthony next to him, it's just fantastic to see the success that the guys are having and continue to have, and will continue to have, for a very long period. We're here with a new type with Square today. So, we were one of the biggest investors in the IPO in Afterpay at $1 a share. And just so happy to see the great success they continue to have.
$1 a share, how about that? Now, Joey's got a text on the line here, regarding Afterpay. Perfect time and great interview with James. Can you please give me some spectacular tips next time of the next Afterpay and when it pops up? Now, this is actually your job, isn't it, Chris Stott? You've got to look for these, the next best things and the things that will turn, as that $1 did in Afterpay, into the $39 billion valuation that it did today. Anything in your sight at the moment?
Oh, look, there always is. I'm not sure we'll get anything like that again. From $1 to over $120 is extraordinary. But one company that we do like in the portfolio is Unity Wireless. Certainly, essentially a challenger to the NBN, running fibre to the homes in your states. So, growing very, very strongly now in the ASX 200. We think they're well set for a good 12 months of earnings ahead of them. So, that's one on our radar. I'm not sure if it will be a 100-bagger like Afterpay, but certainly I think that's a standout company for us in terms of the upcoming results season.
Okay, there you go. You've liked Aussie Broadband for a while, haven't you?
Well, we have, and they put out a really strong set of results today, guiding the market to the upper end of their previous guidance. And, they represent now 5% of the NBN market here in Australia. So they've been able to not only grow their retail business, but they're now penetrating the business market really, really well as well. So gaining share there too. So we think that, becoming a well-known brand in that internet ISP space. So, really well-managed business, strong balance sheet, good cash generator. And, we think they will continue to take market share with their superior service offering from here.
Hey, also, Chris, after the break, we're going to talk about the broader implications of the Afterpay deal. I know I keep coming back to it, but my goodness, we don't get a story as big as this very often, do we? We're going to talk about what it means for the tech sector more broadly. We had Jack call us earlier from Melbourne to ask what it means for other tech stocks listed on the ASX like Zip. Do you think there's a flow-on effect?
Absolutely. I think what it does is really solidify Australia's space or representation in the technology sector as a whole, and really hopefully gives confidence to those up-and-coming entrepreneurs that they can achieve anything. And we've seen the technology sector as a whole continue to grow on the ASX, in particular in the last 4 or 5 years with the introduction of the technology index. And I think that certainly this really puts us on the map, if we hadn't been on the map already, in terms of what Australian technology companies can deliver in terms of over the medium to longer term.
Chris Stott, thank you so much from 1851 Capital. Fabulous to chat to you. Thank you for tonight.
Pleasure, Brooke.
There you go, Joey. That's Chris Stott's tip for our next good stock. And if you missed what he said, make sure you go to the podcast, Money News Podcast. And thanks for your calls. A couple of emails we might get to as well. Let's get some news headlines for you. Lauren Howard, good evening.
Good evening, Brooke. Victoria has tightened its border bubble with New South Wales. Non-essential movement across state lines will be banned from Wednesday due to Sydney's COVID-19 Delta variant outbreak. Police have arrested 15 people and issued 21 fines after quashing several attempts to protest Queensland's lockdown orders. Sydney house prices have continued to climb through July despite the lockdown. And Australia's cycling team has suffered a nightmare crash in the Tokyo Velodrome in Tokyo. The handlebars of Alex Porter's bike broke during the team's qualifying ride, and he fell face first onto the boards, losing skin on his nose and chin. Australia will get another attempt at riding. And in the NRL, the Titans are leading the Bulldogs 28-0 with 64 minutes played. And Brooke, there'll be more news in about 27 minutes.
Welcome back to Money News, 131873. Lots to get through. I want to mention lockdowns and obviously the broad implications of that. Markets might look through that stuff, but that hurts in real time. So we will look at that as well. But this very big story today of Afterpay being taken over by the US payments giant Square is obviously a big win for Afterpay and its shareholders like Jenny, who we've spoken to tonight. But look, it's a major coup for Australia, and particularly its fintech sector. The benefits of this one are going to be felt widely. Deals of this magnitude shine a spotlight on the growing number of Aussie fintechs and startups on the road to achieving great things. There was a fabulous tweet from Paul Bassett today that I saw. He's the founder of the jobs marketplace Seek, and he's a big-time tech investor via his fund SquarePeg. And this was his tweet today. Our economy is transforming dramatically. Afterpay is our biggest ever takeover. Atlassian's market cap exceeds $80 billion US, and Canva reportedly raising at $30 billion US dollars. Throw in the emerging group of Airwallex, Deputy, Rocked, CultureAmp, plus thousands more startups with big dreams. So exciting. Remember back in 2015, Malcolm Turnbull pitched for an ideas boom, for us to become an innovation nation, saying we put too much emphasis on penalising failure and not enough on celebrating success. And he copped a lot of flack for it at the time. But this news today, the biggest ever takeover deal, isn't it amazing? It does not involve a mining company or a property giant or an oil and gas producer or infrastructure manager. It's a 6-year-old financial technology company that's technically still in its startup phase. And it was started by a then 23-year-old. Rebecca Shotguppy is the CEO of FinTech Australia, and she's with us on Money News tonight. Rebecca, welcome to the show.
Thank you for having me.
How valuable do you think Afterpay's success is to the startup sector here?
I think it's an incredible story. I think it shows that we bat above our average, and I think that Afterpay will be the first of many more companies to come.
Yeah, we punch above our weight. I mean, well, we can look at the Tokyo Olympics and even say that. Is it true in the fintech space?
It definitely is. Look, we've got Afterpay, OpenPay, Zip, Airwallex all doing great things overseas, and we've got the likes of Athena, TikTok, and Judo Bank doing amazing things locally as well.
Yeah. So do you think we'll see more big Australian tech deals with the global spotlight that this puts on Australia's sector then?
I think we'll not only see more global tech deals in Australia, but I also think our Australian fintechs will continue to do deals overseas. For example, Wiser recently acquired a Spanish fintech, and I think that we'll see the trend going both ways, our fintechs getting stronger and also international fintechs approaching Australian tech businesses.
And the fintech space, I mean, just to talk fintech, it could really be anything. I mean, is there an area that's seeing the strongest growth or interest at the moment?
Well, I think naturally Australia is very, very strong in the payment sector, and we're increasingly becoming well known in the data and the wealth tech businesses as well, and the neo lending. But we're going to see agri-tech and health tech, which are also parts of fintech, continue to grow given our strength in those sectors as well.
Yeah, agri-tech, I think that's such an exciting one as well. And so what impact would you say has the pandemic had on the fintech sector?
Well, the pandemic has actually accelerated the fintech sector because we've had to rely on digital payments or digital mortgage lending or a range of things we now have to transact digitally because it's not as easy to go to a bricks and mortar store. So we've actually seen huge growth across fintech more broadly, not only in payments but in wealth tech and lending as well.
And what does the fintech sector need from here? I mentioned Afterpay and Square. I guess we want more Squares looking to buy, and the global tech giants are just unstoppable at the moment. But are the settings right? Have we got the right people? I mean, we often hear about the lack of the right people here in Australia to drive the sector forward, despite all of that potential you're talking about.
Yeah, I think we actually have amazing talent in Australia. I think the things that we really need a digital ID framework, and I know the government's working towards that, but the more we transact digitally, we need to be able to prove people based on their digital ID rather than in-person witnessing of documents. We need a robust R&D sector. We also need to iron off the finishing touches in CDR to make sure that we've got open data running not only through banking but through insurance, superannuation, telco and energy as well.
Rebecca Shotguppy, thank you so much for your time tonight. CEO of FinTech Australia, great to have you on. Big day for you guys.
Yeah, huge day. Thank you for having us.
Now, I got to say, thank goodness for the Afterpay news today, because as a journalist who does a money news program with my mate Sam Stove, you're thinking, oh, banking holiday Monday. That's always going to be quiet. And then bam, we got the Afterpay news. Yeah, it was a banking holiday. So I want to know, if you were in New South Wales, you work in banking and finance, how was your day off, slackers? Yeah, it's the first Monday of August. That's the tradition, bank holiday, first Monday of August. And I was actually thinking at one point, say, why does this one industry that doesn't really do any manual labour, why does it get a day off and the rest of us just keep on keeping on? Well, actually, if you want to know, we were looking into this. The tradition began in the United Kingdom, and it was actually designed to compensate staff members for the extra work involved in finalising everything for the end of financial year. A banking holiday has been granted in New South Wales since 1875. So 131873. Does your industry have an equivalent of a bank holiday? Do you get a day off that the rest of us don't? 0460873873 if you want to text me on that one. Now, just before I go to the break, I need to mention, of course, the extension of the lockdown in Queensland, businesses shutting up shop. The Queensland Chief Health Officer today warning people in offices, go home. Very real fears that this Delta outbreak will only get worse. And, of course, the extension until at least Sunday after the 13 new COVID cases, the biggest single day of cases since the pandemic began. But the thing that I was really looking at today is the cancellation of the Ekka, the Royal Brisbane Show, just days out from opening, and the producers who are reeling from that now. It's 2 years in a row the Ekka's been cancelled because of COVID. And, you know, like all of these shows, the Ekka brings the country to the city slickers get a really good insight into the lives and livelihoods of rural Australians. But economically, primary producers are going to lose income because of the Ekka's cancellation. And it's actually worth $300 million to the Queensland economy. 415,000 people attended pre-pandemic in 2019. And of course, the thing on everyone's minds today was the iconic Strawberry Sundae, which, I mean, it's its own economy. The Strawberry Sundae, it involves 4 tonnes of fresh Queensland strawberries, 6 tonnes of local lick strawberry ice cream, 3 tonnes of vanilla, fridges, freezers, transports, cones, cream, and some casual jobs as well. All off for another year. This is Money News. It's 7:45. We're going to talk property next. Time for an Olympic update.
An update from Japan. Thanks to the new Kia Cerato GT. Get mean.
Good evening, I'm Jordan Tunbridge. Australia's cycling team has suffered a nightmare crash in the velodrome. The handlebars of Alex Porter's bike broke during the team's qualifying ride and he fell face first onto the boards, losing skin on his nose and chin. Australia is getting another attempt at riding. Meantime, we are out of medal contention in the women's team pursuit. The best result we can hope for is 5th. Australia is in contention to win a medal in the equestrian eventing team final at the Olympics tonight. The Aussies are currently ranked 2nd behind Great Britain after the dressage and cross-country events. Australia's swimming team is flying home from Tokyo tonight after winning a record number of medals, including 9 gold. But 4-time Olympian Kate Campbell is staying behind to run for a spot on the IOC Athletes Commission. Matilda's captain Sam Kerr is reportedly set to play in tonight's semi-final against Sweden. There have been fitness concerns for Kerr, who has played every minute of Australia's campaign. Australian sprinter Riley Day will tonight compete in the women's 200 metres semi-final on her Olympic debut. The 21-year-old says she is going to absolutely floor it after qualifying with a time just short of her personal best. And American gymnast Simone Biles will compete tomorrow after skipping 5 events due to mental health concerns. The 4-time Olympic gold medalist has been listed on the starting sheet for the balance beam final. I'm Jordan Tunbridge. That's the latest on the action in Tokyo.
Real estate. Yes, we love talking property in this country. Almost every week we're here with another report on house prices, aren't we? And inevitably they say that they're climbing faster and higher than ever before. So here's today's stats for you. Basically in the last 12 months we've had Sydney home prices surging 18%, Melbourne home prices up 10%, Brisbane almost 16%. Nationally, values have jumped 16.1%. And that is the fastest annual growth in more than 17 years. So yes, record-breaking stuff, which shows even as cities deal with lockdowns of the snap and lengthy variety, house prices just keep going up. People still buy them, people still sell them, pandemic be damned. Ray Ellis is the CEO of First National Real Estate. Ray, welcome back to Money News.
Pleasure to be here again, Brooke. And yes, the house prices continue to grow, meeting the demand what Australians want.
What Australians want. Yeah, exactly. I mean, I've chatted to you before. It's, you know, as much as we've digested what COVID has meant for all of us, we're just in love with property almost more than ever, aren't we?
Exactly. I mean, for the past 100 years, Australians have always loved their home, whether it be a rental property or a mortgage property. And what COVID has taught us is it's now our home, it's our office, it's our holiday, it's our local entertainment area. And with lockdowns in Sydney and Brisbane, it's all of those combined in one. So it's made us re-examine our relationship with our home, and it's made it stronger than ever before by either upgrading, downsizing, tree changing to the country. But that's rekindled that interest, which has always been strong.
Yeah, well supported by record low mortgage rates, the savings that people are building up because they're not doing overseas holidays, and as you said, things like work from home. So there's plenty fueling it. Although even through lockdowns, I think maybe we've been surprised a little bit by the resilience of the property market. You know, look at these figures today, and CoreLogic is saying, look, there's not actually a lot of properties withdrawn from auctions when you look across the capital cities, even in lockdowns. So the resilience is on display. What have you noticed in terms of lockdown impact? Whether it's Sydney, Queensland, looking pretty ominous at the moment, Melbourne, five and counting?
Well, Melbourne last week was the first time we had live auctions again, and Sydney had their fourth week of online auctions. We haven't actually seen any decline in interest. There was an apartment out of Macquarie Park we sold last weekend before the lockdown. That went for $860, which was $25 above the reserve. 7 bidders. Online on the weekend, and Russell Lee and other apartments sold for $1.5, $240K above reserve, 6 bidders. So the bidders are still there. The auction's a little bit less dramatic online, but the bidders are out there. And out at Revesby, we're selling properties in 3 properties we sold this week in 24 hours. One had only been on the market for that morning. So you can't beat the figures or the results. The passion for property is still there. And as you said, mortgage rates are helping it.
But there still could be an impact felt, though, in coming weeks, do you think?
Well, the issue now is what we in our industry call listings, which is properties come on the market. And particularly in Sydney, where we cannot go and meet the vendor to talk about selling their property, that's going to have a dramatic effect on supply in the next 4 or 5 weeks as long as the lockdown continues in Sydney. It's similar in Melbourne and Brisbane, but not to the same degree as in Sydney. So we're a supply and demand industry. Supply is becoming weaker by the lockdown and economic conditions as a result of that. But the demand is still strong, so we can't see any abating in this demand over the next 4 or 5 weeks at least, and not into the early part of next year.
So what do you see as the biggest threat for the property market?
The biggest threat for the property market is the delay in the vaccinations. This is a real estate segment, but we as an industry and our network, particularly through our national body, we've taken the position that we can all debate around the semantics of the issue, but our economic conditions and our normal lifestyle is not going to continue until the majority of people are vaccinated in this country. And I employ all leaders in any shape or form to do everything they can to encourage that, because until we get that safety, and we see this around the world when you look what's going on, particularly in the UK, they've had high cases, but the economic activities have happened. If we don't return to that sort of normality in a very short space of time, that's going to affect the property market, but all industries within Australia.
Yeah, and you have plenty of staff to worry about, 5,000 to 6,000 across Australia and New Zealand. So, yeah, the vaccination is an important part of the future for your business, obviously.
Exactly, and we encourage everyone to do it. We all have our own personal choices, whatever, but if you want normality, if you want your life to get back to normal and visit your grandparents and visit your friends and relatives and go to Walker Security, and heaven forbid, just to be able to go from one state to another, that's the only way out of it. Everything else is semantics at the moment, and that's a consistent message. That's the clarity what Australians want. I think we're sick of the debate around the nuances of who, what, how, and why. We just want the answer, and the answer is vaccinations.
Well, you delivered the message loud and clear, and I wholeheartedly agree. Thank you, Ray Ellis, CEO of First National Real Estate. Great to chat.
Pleasure, Brooke. A
couple of texts here on the Money News text line. I'll address those after the break. Welcome back. Thanks for all the texts and calls and emails. There's a text here asking, with the Afterpay takeover, how does it work? Do they issue Square shares on the USA market, or can we choose cash? Okay, so the answer to that is if you're an Afterpay shareholder, you get a choice. Square trades on the New York Stock Exchange. It'll set up a secondary listing on the ASX, and then Afterpay shareholders can trade shares of Square via CDIs on the ASX, and it's basically the same that ResMed does. That's the same way we see those trade. Or, as an Afterpay shareholder, you'll be able to elect to receive NYSE-listed Square shares if they have a method to own those NYSE listings. Hope that helps. I'll catch you tomorrow.